Thanks everybody for joining us. As Drian said, my name is Monique and I'm VP of Programs at Mission Investors Exchange. It is the leading impact investing network for foundations dedicating to deploying capital for social and environmental change. So, as Drian said, we're here today to talk about what it takes to move beyond box ticking and to really deliver on inclusion goals in a practical way and how that applies to impact investing. Building a little bit on the conversation that started earlier this morning, some people touched on what they're doing in the venture capital space, but we're going to talk a little bit about private equity and some public markets approaches, in addition to venture and philanthropy here. So for the purpose of this discussion, we are principally talking about diversity from a gender and racial or ethnic lens, though the solutions that we hope to surface in this conversation could apply to other aspects of the diversity spectrum, sexuality, age, ability, neurodiversity, and those kinds of other things. So joining me in this, what I know will be an enlightening, solutions-focused discussion, are Mina, Pacheco, Nazemi, who's on video call. She was able to join us, and we got this technology working, so cross fingers that it all works well. We have also Hunter Lovins of Natural Capitalism Solutions, John Duong from Lumina Foundation, and as well Elisa out from Chloe Capital. So I'd like to invite each of you to introduce yourselves further, touching on why this topic is important to you and relevant for the asset class you represent. We'll start with Mina by video, just in case the delay, we need to work with her a little bit on that, and then we'll go to John, Hunter, and then Elisa.
Okay.
Yay.
Well, good afternoon, everybody.
It's working.
My name is Mina Pacheco. I actually, I apologize. I was not able to make it in person, but Monique was gracious enough to figure out the video. I've been investing in the private equity space the majority of my career, and actually started my career investing on this diversity inclusion space back in
I think you're just on a little bit of delay. Mina, if you could repeat that. Let's see here.
Private equities. Yeah, so I've been investing in private equity. I've been investing in private equity managers as part of the subset of some the deals that I've worked on at my current firm and also my former firm when I was part of the idea and this concept of investing with women in public plans have been very active in, but we're very much hoping that a lot of that follows through in some of the discussions here with some endowments or foundations and the offices.
Well, thank you, Mina. We appreciate those perspectives, and we will certainly hear more from you as the conversation develops. John, if you want to introduce yourself next and talk a little bit about what you're up to.
Sure. Welcome, everyone. Thank you for having us here. My name is John Duong. I am the head of impact investing at the Lumina Foundation. Essentially, it is a $50 million endowment, sort of not carve out, but grant budget that we use to make impact investments aligned with our mission. I am an immigrant myself. I grew up in Wisconsin, was a survivor of the Khmer Rouge Cambodia concentration camp, and have been really surprised at my sort of pathway. I thought I was going to go into the medical field, which is typical what most Asian guys do. I clearly disappointed my parents, but having grown up in Wisconsin, clearly very small town, very white. Then went to Wall Street and essentially had experienced a lot of the obstacles that I think are one of the reasons why I do what I do. And I think one of the things that I've done on the side is to create a platform called Potentially, which is a diversity recruiting platform focused on mid-senior and board positions for diversity candidates, which is broadly defined across race, gender, sexuality, handicaps, veterans, literally all across the board. But at Lumina, our goal is not just to check the box. When we think about equity, it's literally how do you actually change the system? How do you make it sustainable? And how do you prove to the market that it is a investable strategy? And I can talk more about that as we go into the conversation.
That's great. Thank you for that. And Hunter, if you would.
I'm Hunter Lovins. president of a little NGO called Natural Capitalism Solutions. I got dragooned by a marvelous woman named Donna Morton to help create a majority women-founded, women-managed, women-owned, invested into finance company called Change Finance to do just that, to transform finance. We rang the bell on Wall Street 3 weeks ago on behalf of a new ETF we just launched, CHGX. This is the first truly fossil fuel-free ETF. It doesn't, like some of the ones that are greenwashing themselves, own Halliburton or Schlumberger or any of the other oil field services companies, nor does it own companies that are invested in bad stuff across the board, have slavery in their supply chain. We are investing in large cap, publicly traded American companies in this first one, and so far it's significantly outperforming. And I think it will continue to for some fundamental reasons. Now, obviously, predictions are risky, especially those about the future. But we are in a time of fundamental transformation. I asked a question in one of the last panels of those of you who are doing finance, are you paying any attention to the fact that it is quite likely that within the next 10 years we will witness the dissolution in value, probably pretty complete dissolution in value, of the oil, gas, coal, uranium, nuclear, utility, auto industries, the banks that hold paper in them, and anybody who's investing in them, like all the big pension funds. This is, if you just take the fossil assets, never mind the rest that are fixing to be stranded, it's 20 to 30 trillion. The 08 mortgage collapse was 2.7 trillion. So this is an order of magnitude greater. Citigroup about 2 weeks ago came out with a report saying if you count the foregone revenues from digging up, selling, and burning fossil, it's 100 trillion. We have no earthly idea how to deal with a disruption on the scale of that. So you say, well, not possible. The Arabs just hit the world record low price in solar, 1.7 cents a kilowatt hour. What do y'all pay? 11, 12, 20? Storage. Elon beat the promised 100-day to put up 100 megawatts of battery storage in South Australia, having previously put 80 in California. Electric car. China has just said it's going to get out of internal combustion engines, joining India, the UK, France, Norway, and now probably California. China alone is a quarter of the world automobile market. A year ago, the Fitch report said if Elon hits his target of a $35,000 200-mile range vehicle, the oil industry is toast, and so is the auto industry. Driverless car. I was just with Tom Chi, the lead designer on the Google car, who said, I said, Tom, is this possible? He said, within 10 years? Oh yeah, easy. So each of the pieces that this guy, Tony Seba at Stanford, says is going to drive the world to be inevitably 100% renewably powered by 2030, each of those pieces are in place. Where's your money? So it's in part why we rolled out this truly fossil fuel-free ETF.
And there's a new ETF that you all are developing related to
The
gender.
next one will be a gender lens
But we'll
ETF.
get into that a little bit later. But I mean, this has been a great stage setting that we have systemic problems that you've certainly articulated quite well.
And again, the
it's all
company
related.
is majority woman-owned. We have one white male. Every finance company should have one.
Yes, and thank you for that. And Lisa, we'll let you spend a few seconds introducing your work.
Thanks, Monique. Hi, folks. I'm Elisa Miller-Out, managing partner from Chloe Capital, an early-stage venture capital firm with a focus on gender lens investment. So I'm very happy to be here in this amazing event. My background is I grew up in New Orleans, a city very rich in diversity and rich culture, in a very diverse family across all lines, race, gender, sexual orientation, but I found that as I moved further in my career and got into the technology industry, where I've been on the entrepreneur side for the last 20 years, that my life grew less and less diverse as I progressed in that industry, and found that the numbers of women in technology and entrepreneurship continue to be, unfortunately, very low when we're talking about both gender and ethnic diversity. So after experiencing that, I was lucky to have an exit from my company last year through a successful acquisition deal, and I decided that now I had this career transition and an opportunity, and I decided to devote the next part of my career to advancing solutions to that gender gap and diversity gap that I've experienced in the technology, entrepreneurship, and venture capital space. So with that, I founded Chloe Capital, and I'm looking forward to living that mission through both our investments as well as other initiatives and programs that we create to collaborate with others in the space and hopefully move this change forward much faster. We need it to take, people project it's going to take several hundred years to get true equity, and I think we can achieve it a lot faster. From the technology space, we're all about innovation and finding efficient solutions to problems. So I want to apply that thinking to this large issue we face so we can really achieve equity much faster.
Thank you for that. And just to level set, I just want to show you guys this simulation from doesgenderbiasmatter.com. Pretty straightforward what they're talking about there. Before we turn to those various solutions that the panelists are talking about, this simulator essentially just to explain quickly what you see on the screen, and Mina has a version of this as well. So it's just taking twice-yearly performance reviews over 10 years, starting at level 1, which is entry level, through to senior executive level, and shows what happens when there is 1% of bias in the system in favor of men. And as you can see, and sorry for the panelists if the angles are not so great, it's essentially parity in level 1, 52% women. It's 33% women by the senior executive levels. That's about a 2-to-1 ratio. And just to move forward on that, in a 5% bias ratio, 5% bias, in the performance reviews, you can see that the senior executive level essentially gets to 3-to-1. If we advance that one more notch to 10%, you can see that by year 10, the senior executive level is essentially a 13-to-1 ratio. Does this sound familiar to you guys? Does this kind of look like gender ratios at the C-suite and corporate board level? And in the venture capital space, perhaps this might be even worse, particularly for women and diverse founders who are under-indexed to the single-digit levels in that asset class. So we can easily extrapolate from this gender bias simulation to other kinds of diversity, and we live this every day. We see the numbers. We see who's in positions of power and leadership and who isn't. And the headlines, of course, every day on the challenges that women face in terms of sexual harassment and the Me Too movement that has gone global have brought to light this problem in a way that has been stark for some who probably thought we were past that and potentially past some of the racial issues in America because we were post-racial. But as we can see, some of the marches and some of the other headlines that we see, we aren't. These issues are systemic, and some of our panelists are finding ways to deal with this. Thankfully, people seem to be held accountable. They're starting to be held accountable for some of these overt hostile acts. However, the majority of the bias in our system is much more subtle. It is not attacks, it is not necessarily overt, but much more likely to be unconscious or implicit bias. And much like this simulator, it's harder to spot when it's in a performance review and it's individual people making what they think are individual decisions. But the reality is we have the effect over time, a 13-to-1 ratio or worse in many asset classes and in many parts of our economy. So these kinds of bias are looking more like subtle things that you'll see here, depicted here on this screen, and more look like failure to offer support and withholding of access or opportunity, and not necessarily overt. And so given that, and this idea that the ability to help is often related to power and in-group helping, and what does that mean for those who are in these out-groups? And we all know, because the patriarchy exists, who has the power in our economy today? And what does that mean for our investment portfolios, for our workplaces? And though the simulation was based on careers, I wanted to just give a context setting because these biases apply to the way we invest as well. And a nuanced understanding of this kind of bias is important to create tools and strategies to overcome in ourselves, in our workplaces, and our investment portfolios. So Elisa, you mentioned earlier about the experience that you had in Silicon Valley. If you want to share a little bit more about what you saw and what you saw perhaps in other people's lives as well that were galvanizing for you.
Yeah, absolutely. So I'll share one type of bias that I experienced a lot, both on the entrepreneur side as well as on the venture capital side. And there's been a recent TED Talk about this and a study about it, but I think it's something that many women have probably experienced at one point or another. But there's been a study that venture capitalists, the questions that they ask women entrepreneurs are very different than the questions that they ask male entrepreneurs. And so the questions result in different answers, of course, as well. So a woman entrepreneur often gets asked questions that are prevention-oriented, and a man gets asked questions that are promotion-oriented. So what that means is they might ask a male entrepreneur, what's your vision for the future? You know, what are your future sales going to look like? These big picture questions where they can speculate into the future and talk about a big vision for growth. Women are often asked questions that involve defending the past, defending their past record. You know, how are you going to maintain these sales? Or, you know, what's your track record from the past, 5 years? And so as a result, they're put immediately on the defensive. The good news is you can shift the answers. If you're aware of these types of biases, this isn't always true, and it's not the perfect solution, but you can sometimes, when you're aware of these types of questions, shift your answers so that even if someone asks you a prevention-oriented question, you can give a promotion-oriented answer. So if someone asks you about something from the past and tries to put you on the defensive, much like a politician, you can simply spin the answer and hit your talking point, which is about your much bigger vision for growth and impact. So these are some ways of, addressing something that can be a challenging bias to overcome, but that's just one sort of challenge and also a potential solution.
And then Mina, just to build from that, because I think some of the work that you experienced in the emerging manager space and private equity is somewhat related, and can you share a little bit more about some of the failures you see in those emerging manager programs and what you sort of gleaned from your experiences in the private equity space?
Yeah. I was nodding my head. There's a lot of similarities in terms of even the capital allocation process for I tell you how many times when we've had women managers come in, and then as we do reference calls, we get these comments, oh, well, so-and-so's so difficult to work with, right? And this comment of difficult is you kind of peel the onion and say, okay, well, what does that exactly mean? You're holding people accountable and all those type of things that, but it wouldn't be foreseen as a difficult to work with thing. So we'll see those similar challenges, and that is why it's super important to have more limited partners who are women, because yes, we do ask these questions and curious at ourselves, or we just know what's going on when those kind of comments get made, particularly when you're raising capital. And I think a lot of it is not, hey, what's your track record, how have you done, but do they just like you, and do they want to do business with you? So I think what we're seeing in the venture capital is very similar to what we've seen, at least on the asset management space and private equity. But that's where a lot of these programs, if they're kind of being completed correctly, is that it allows an open forum, so and managers and women managers are able to get access to capital. The reality is that there are still not private equity firms today, you see more of the traditional buyout, distressed. You don't see as much of that. Maybe you see a little bit on the real estate. So, there is, I can get into why that is, but are set in place. But it's very important to have people with a mindset of, hey, this is it. This is about really backing women and diverse
Managers.
XYZ fund that just went out of, a Carlisle or a big KKR.
Thank you for those comments, Mina. And then, John, the work of Lumina is kind of unique in a couple of respects. I think you have something that you call the equity imperative. And can you talk a little bit why Lumina came up with that and sort of what problems that you're trying to solve for with that work?
Sure. There's a lot of other foundations that have focused on racial equity or equity in general. Lumina is not the first one, clearly. Our goal is to not be the first, but actually to drive our mission in a way that we believe is the right way to do that. In terms of how we think about our equity imperative, it's not just about checking the box. I'll give you an example. At my last employer, we had there was a vehicle, a nonprofit vehicle that had been capitalized with $100 million in Detroit. And for about 4 years, this was done during the downturn where they decided that they really need this vehicle to focus on the Detroit market. For 4 or 5 years, essentially, they said there's no entrepreneurs of color in Detroit.
The binder's full of women problem?
Yeah, and so we said, okay, what we're going to do is we're going to create our own little sub-vehicle. We called it the Entrepreneurs of Color Fund. It was a very small vehicle. Immediately, they started seeing entrepreneurs of color. It's quite ironic how that just immediately catalyzed it. Mm-hmm. So we were seeing these type of systemic issues going on. At Lumina, what we wanted to do is go a little beyond that. So I was taking some of that experience in the investment world. One of the funds that we had talked to, they said, they're really proud of their track record on diversity. They actually have one portfolio company out of 20 that was a diverse manager. And I'm like, wow, that's great, amazing. Within our first 18 months of investment, we actually have 7 portfolio companies, and 4 of those 7 are led by minority managers. And it's not just about checking the box in the sense that they're led by or founded by minority managers, but the fact is that they're also supporting and focused on serving the population that's underserved. Their board is diverse. So it's not just the leadership, but their staff, the population they're serving, as well as their goal and their mission. So for us, that's how we think about the equity imperative, because that's the only way that it can be sustainable, and that's how you change that system.
That's great, thank you. And Hunter, if you would just share a little bit more about the problems that you're solving with that new ETF that you are thinking about in terms of the gender space.
Sure. We know from principles drawn from nature that the most abundant ecosystems are where 2 of them come together, where a river meets the ocean, where a forest meets a meadow. Why? Because they are diverse. Diversity is the basis of economic abundance. Michael Porter was once trying to figure out what could predict economic development success, and was startled to find that it was the prevalence of homosexuals. He said, how can that be? What's driving that? He was convinced the numbers were robust. So he dug a little deeper. It turned out to be a surrogate correlate. What it was showing was a situation where there is tolerance of diversity, because gays go where they're tolerated, as do all sorts of other people. So where there is tolerance of diversity, you get the underpinnings of economic development success. We know now that companies that take women seriously don't make things that are harmful to women, don't treat women badly, respect women by promoting them into management, and particularly putting a significant number of them on the board, financially outperform companies in the same industry where they don't. It turns out if you have 3 women on a board, you're going to have financial outperformance. Why? Why not 1? Well, 1 gets isolated, 2 glump up and go off with each other, 3 start to infect the whole company. So we're going to be taking our 100 large cap American companies as the baseline, and then from that, taking the subset of companies that are treating women right. And again, I think it's going to show that it will significantly outperform because of these fundamental underlying principles.
That's great and very powerful. Elisa, I know that you have been also thinking about the intentionality aspect related to your new work with Chloe Capital. Can you speak a little bit about why that's solving the problem in a way that I think other venture firms like the one that John mentioned couldn't really source and fill their pipeline in a way that is in keeping with at least the values you want to express?
Yeah, absolutely. So we're investing at the intersection of diversity, innovation, and impact. That's our whole focus. And to do that, we do need to bring more diverse voices to the table. We recently ran our first program, which was a one-day accelerator program. And to do that, we wanted to bring our thesis to life, and we were bringing more women to the table on the investing side as well as on the entrepreneur side. And we had to reach out to really diverse communities to source the deals for that. And I think often women need to be really invited to the table. I thought it was beautiful what John said when he mentioned, that just putting the fund out there and saying, hey, this is an Entrepreneurs of Color fund, all of a sudden brought more to the table. And similarly, we're reaching out. There was a discussion this morning also, I think, with Alicia and Angela's panel this morning, where they talked about reaching outside your networks, where you can't a lot of venture capitalists only invest where they get referrals from their networks. The problem is, if their networks aren't diverse enough, they're not going to see the deal flow. So we were very consciously reaching to much wider, both national and global networks that are focused on this space. So it's everything from groups like Digital Undivided and Lesbians Who Tech, and there's so many Women 2.0, where I'm on the board. There's so many great organizations that are focused on diversity in the space. Access Latina, so many places where you can find more diverse talent if you just go out and step outside and say, I'm not just going to, go to the companies that get referred by my old boys network, So by doing that process, we were able to source just incredible talent for this program. We had over 100 applicants for our very first program. We're able to narrow it down to 5 that really represented our thesis so beautifully. We had people representing the African American, Asian American, and Latinx communities. We had diverse age groups, which is another area where we see underrepresentation in tech. We had entrepreneurs who are moms. In fact, our winning entrepreneur was a mother of 5 who had just had a baby. And that is something that, let me tell you, you do not see that at most technology accelerator programs that I've been to. If you go to a Y Combinator event, you're not often going to see a nursing mom on stage pitching her company. And that's another group. These are all groups that are underserved by technology and innovation. And this is a massive problem for all of us. It's both a huge economic opportunity because these are massive and growing markets, but they're not being served by innovation currently. So I like the idea of also, investing in both these diverse entrepreneurs and also the markets they serve. So as I mentioned, our winning company was serving the Latinx market as well as being a mother. So it's a huge, massive growing market, and she's seeing tremendous growth. Because it's a market that's not being served by this kind of innovation. So,
and just to the point of innovation, Mina, if you can share a little bit more about the innovative structure that you're working on in the private equity space, and share with us a little bit about how you're solving the problem in that asset class.
Yeah, we've been working. So just a little bit more of my background because I've had the benefit of seeing some of the challenges, particularly for women. And one of the challenges that we find is that when women are kind of at that point and ready to kind of maybe start their own firms, is also happens to be when they're raising families, or there's just kind of other dynamics, which ends up being that most of the women who are starting their own firms end up kind of being a little bit, more seasoned than the average emerging manager on. But what we're doing is spending our time and building relationships with women or diverse talent and doing transactions with them on a one-off basis, even before they get to that point where they're raising a fund, because it typically takes 2 to 3 years to raise a fund.
Right.
And that is just such a long process. And so the hole that we're trying to fill in is this gap of career. You're ready to make that jump. You know it's going to take 3 years to raise a fund, but you want to stay active in the market. And so that is where we have what we call our next generation fund, where we're doing deals with individuals who have experience, track record, but just don't have the capital. And I'm kind of talking more about it from the more traditional buyout than necessarily on the ventures.
Right.
But if we want to switch to the venture side, I think one of the challenges we've seen is that you have all these smaller funds, but there's not a lot of access to what I would describe the big money, right? The big LP commitments. If you look at the average size of the venture fund that's women-led or diverse-led, it's probably under $50 million.
Right.
While the more as kind of this is kind of an asset management we found is that there's challenges with women getting access to larger commitments.
Right.
And so that also limits kind of the upside there. So we're working on a couple solutions with some corporates on kind of solving for that problem as well. But I think overall, our view is, having just the right mindset, for our clients and our limited partners who are interested in truly kind of taking a differentiated approach.
Thanks for that. And John, if you want to talk a little bit further about how you all are actually acting with this equity imperative, what does that change in terms of how you make your decisions and maybe the things that you select?
Yeah, I think if you think about, this is a quote from one of my HR staff people on the issue of diversity. A lot of times people think that if you have them check the box by having them at the door, at the table, that's enough. And reality is just being at the table is not enough, because you're just having them sit there but not really listening to their voice.
Right.
And that's how we want to change the system. You actually want them to be there to contribute to the conversation. That's truly changing the system. The way that we invest is that it's not just about finding the right manager or CEO, founder that's diverse, but how do we help them? Where is the strategic value that we as Lumina Foundation, the largest private foundation focused on higher ed, how do we become a good partner for them? And if we're not the right person, obviously we'll find and refer them to the right folks. But we think about where our strategic value is. It's not an accelerator, but it's not a traditional VC fund. We are using grant dollars, we are social investors, and our primary objective is around the social aspect of why we're making that investment to drive our mission. And so we think about these entrepreneurs, where they're at, what their track record is, how can we be additive to their success? So part of that is being on their board. It's not just somebody who's got a financial background, because some of these entrepreneurs are pretty savvy on the financial side. It's about our network. We talked about the relationships, right? Who do you open your Rolodex to? Because they don't have that. They're in their echo chamber, the investors are in their echo chamber. We want to be that catalyst. When we make an investment, it's usually with the intent to leverage our capital 10 to 20 times, something that you can't do with grant funding, but we're using grant dollars to make these investments. So our theory is that when we put our brand on there, we give them the confidence that they have, which they wouldn't have gotten. As a social investor, as a large private foundation, and through our network, bringing other co-investors into that gives them that traction and credibility to get to a point where they are now much more likely to be successful. So we partner with them as a strategic investor, but we also plant, from a domain expertise standpoint, our grant-making folks on the board. Because some of these entrepreneurs, while they know the education system, they're not literally the professors doing the research.
Right.
They're not the expert on that domain. We have grant people that have been professors. They've been in higher ed for years.
Right.
So you now have domain expertise sitting on that board. You have that cross-fertilization because it helps us too. The cross-learning between what the entrepreneur is doing on the innovation side can help inform our grant making to be much more effective and efficient. So there's that cross-learning, we call it the learning return. And that's how we think about what we can do as a partner to these entrepreneurs. And that's how we differentiate ourselves.
And Hunter, if you want to share a little bit how you're using data to basically express that in that gender ETF that you all are building? And how are you doing things differently? How are you looking at the world a little bit differently that enables you to select in a very intentional way and solve for the problems that you referred to earlier?
Sure. The data is really clear. Something like 73% of women who are investors are unhappy with their financial advisor. 80% of women switch advisors within a year of their husband's death. 87% of women who are looking for an advisor say they can't find one that understands them. The data is just overwhelming that this is a market that people want. There's something like $30 trillion fixing to transfer to the millennial generation within the next couple of decades. Half of them are women. But even before it goes to the millennials, it's going to go to the wives, all of whom are women. And yet financial advisors are ignoring this, or like you say, they check the box. Yeah, right, we market to women. But they don't listen.
Right.
As with energy, in which we are in this profound transformation, we're in an incredible transformation just in the last month or so around gender issues.
Yeah.
And we haven't even begun to see how this is going to play out. Women, how many of you have not had an incident of sexual harassment in your life?
No hands raised. 0% for the video.
0%. So the hashtag #MeToo
Yeah, exactly.
is really profound. And as we talk to potential investors, one of the things these ETFs do, impact investing has been for accredited investors and grillionaires. You can buy our ETF for $18 for the price of a pizza. You can be an impact investor, and young people are loving this.
Right.
Our cab drivers, we rang the bell on Wall Street, swept onto the floor of the New York Stock Exchange, 64 of us, because that's how many they let you have, way majority women, people of color, and young people. And on the balcony, majority women, people of color, young people. And there was even a chant on the floor of the New York Stock Exchange. Some of the young folks said, "What do we want? Change finance. When do we want it? Now!" And the guy from the white male from the New York Stock Exchange leaned over and said, "Get louder." They understand that there is this profound transformation going on. They have no idea how to play in it, how to become a part of it. So we have people that we're talking to either about investing into change finance or buying the ETFs who are going, "Thank God I've been waiting for you."
That's a great feeling to have.
I think it's a great feeling to have, but I think this is a market that everybody ought to be playing in. We're not going to corner the market.
There's a lot of opportunity for
And
everybody.
there's a tremendous amount of opportunity. So everybody who is in the financial space should start taking diversity more seriously, start taking these gender issues more seriously, start taking the ESG issues more seriously. We know now the materiality analyses. This stuff is material to your return. This stuff is really material to your risk. Again, if what I said earlier is true, if you own fossil, you own climate change. And it is coming at us at warp speed. Latest science, we have 3 years to turn around climate change. And young people, and particularly young women, are starting to despair. And we have an incredible high incidence of teen suicide, of young women cutting themselves, self-injury, because they just don't think there's a future. What is the financial industry going to do about this?
Well, I think this is a good point to open it up to the floor. Anyone have some solutions? But also, we'll also take questions of the audience. If you can find the microphone, but you can please shout out. I'll repeat your question. It's way over there.
Here we go.
Oh, you can take hers. Oh, she's running away.
Thank you. Quick question on the biases in terms of the cultural changes that the actual women have. So you said 80% change their advisor at the death of their husband, but how many of those change to another male versus another female? And can you speak a little bit to where we are in terms of actually trusting other women as money managers?
That's a fair point.
Very good point. The majority, 93% of the women asked didn't care whether their advisor was a man or a woman. Only 7% actively said, we want a woman. And so this is part of the whole educational challenge around this. And again, this goes to the bias. You were speaking about the unseen bias that all of us have. Women don't manage money.
We've all been stamped with patriarchy.
Statistically wrong. Women are increasingly the big earners in the family, make the financial decisions in the family, and yet we think of ourselves as financially illiterate. And we talk to so many young women who have just inherited, or women whose husband has died. I don't know anything about money. Well, who's been doing the accounting in your family? Oh, me. You know a lot about money. So this is another one of these hurdles that we have to get over. But again, the more companies we have, the more product we have out there, built by women, offered to women, talking to the issues that women care about. I think that's one of the ways of getting over this.
Thank you. Joan, would you like to answer the question?
It's on. Just talk.
Thank you to the panelists. To the extent that you can divulge this information, I think it would be great if you each give an example of an investment that you currently have and talk about specifics around, I think mostly it's equity, there's the debt. So what type of financing are you making available? What is the underlying business model? What type of returns are you seeking? And can you give an example of how you're actually measuring the impact aspect of the diversity? Thank you.
Mina, do you want to take that first, just so that we can make sure we capture you?
I couldn't hear the question, I'm sorry. Can you repeat it? Do you want to repeat it?
Yes, essentially, Joan was asking if you can describe an investment and what were the characteristics of that investment, including how you measured the impact. The return, the financial return, as well as your selection, and an example.
Yeah, so our mantra is, we're always making these types of investments and impact, but our programs are all for financial return. So we actually don't, as a practice, make any concessions for the fact that it's a quote impact. Luckily, and just a function of I think we're right on in the market where some of these impact investments and women and diverse investments have actually outperformed the main market. And why is that? It's because we're investing in niche areas, or the strength of the management team is quite high. So as we think about measuring impact, we typically measure impact in a couple areas. One is if there's women or diversity at the C-level suite, and also at the board level. We also look through either if it's on the management team of a general partner or if in a company, how diverse the pipeline is. So even if there isn't at that C level, diversity kind of being represented, are they promoting diversity within the organization? And are they promoting them up and having an opportunity for those folks? The second area we spend a lot of time in, and particularly this is more on the investment side, is we spend time on the fair practices and labor practices, and making sure that even if it's not necessarily more at the executive level, but more, if it's more administrative or whatever level. So we look at those type of practices. And then we also look for third, anything with respects to environmental, issues. So we typically like to invest in a lot of, clean energy, or smart manufacturing or something along those lines. And then the last for some of our investors, is we invest on behalf of investors who have an interest in building the economic, they're more for economic development of a specific region. So we've structured programs like that before. So it's typically, every investor that we have has a different perspective on what they're wanting to measure for impact, and that's the beauty of our kind of structure in our program. I would say the vast majority that, we work with are more focused on the women and diversity angle.
Elisa, do you want to share a specific investment and how you came to it and what you measure with respect to that?
Yeah, happy to. I'm happy to share that first investment that we just made out of our accelerator, which was very exciting. Is a $50,000 investment in Mi Padrino, which is a crowdfunding and event planning software platform for the Latinx community. We made a convertible debt investment. We see future investments being more in the $100,000 to $200,000 range. We will continue to play in that seed stage for our first investments, and then we'll reserve follow-on for future rounds, follow-on capital, and invest more in future rounds. But we are staying in that, seed stage companies where we can make a pretty big impact even with smaller dollar amounts near the beginning. In terms of measuring impact, we are looking at, of course, financial returns in the venture capital space, so anywhere from 15 to 20% IRR targets, but we are also measuring impact through both our, diversity screens, but also through the B Corp metrics, which I'm a pioneer in the B Corp movement and the Benefit Corp movement, so a big believer in those metrics for measuring impact across our portfolio companies as well.
John, do you have a specific example for us as well?
Yeah, sure. The example I'll use is a company called Care Academy. This was founded by an African-American woman who was an immigrant from Ghana. She was a home health aide herself and worked herself up. She eventually graduated from the Kennedy School at Harvard and essentially wanted to create this platform. She partnered up with a South Asian woman who's a professor of medicine, a doctor focused on senior care at the Harvard Medical School, and created this company to provide video training courses. Some of these are fairly short, but allows the licensing and credentialing of home health aides. This is a huge, huge market, highly fragmented. There's probably like 89,000 agencies in the country. Very, very fragmented market. It's going to be, unfortunately, a service that we're going to need as we get older in our population. So we saw the potential there long term. And the way that we think about this company is that they are not very entrepreneurial individuals. And so we wanted to provide them with a lot of the relationships that we have. We brought in a VC to invest in them that's very well-known, education-focused VC that can provide them with that institutional quality, board management experience, and help them get the credibility that they want. And for us, the credentialing is the most important part. How can we create pathways for these home health aides to the next...
May I have your attention? May I have your attention? This is the Fire Safety Director. We received the law.
No.
Investigating the law. Please stand by for further information.
Standing by.
Okay, so home health aides, pathways. So ultimately what we want to see happen is that a lot of these individuals who are getting the credentials are women. A lot of them are also immigrants. They don't speak English, so they offer these videos in multiple languages. They offer support in multiple languages. A lot of Hispanic women in particular, and Filipina women. And so our goal is to help provide this pathway so that they go on to go from a home health aide to a CNA to an LPN to a BSN, and eventually in other career paths in the healthcare professional. So that's what we're trying to do. In terms of returns,
May I have your attention? May I have your attention? Mr. Fire Safety Director, as a panel, we received the law on the first floor, Lumina. We're investigating it. We'll get back to you with more information in 1 second.
Still standing by.
so in terms of return, we'll return to that message. The return that we're looking for...
May I have your attention? The law has been investigated and deemed a false law. Stay and remain
no longer standing by.
So returning to returns, we are a social investor, so by nature of the structures that we are investing in, we can't target a market rate return officially. So essentially what we say is we're going to try to get our capital and some diligence fees that we pay to get these deals executed back. But reality is we're actually targeting more on the market rate side, because in order to get other investors to come in, you want to have that no concession. And so getting a traditional VC to join us, ultimately they're going to target the financial return that's normal for a typical VC investment.
I think we have time for one last question, so apologies. We can follow up afterwards. Are you just managing the microphone? And then we'll have final thoughts from each of the panelists, hopefully some inspirational thoughts, and then I think we'll stop standing by.
Hi, my name is Ed Duggan. I'm president of Reinventure Capital here with Julianne Zimmerman, who's with me. Thank you.
I repeat what I said before when I interrupted you.
And I've been an impact investor in the space for over 20 years, and we are doing a new fund that focuses on founders of color and women. And one of the issues that we, all of us are really confronting as we sort of think about this, as we peel back what issues we're really dealing with, is one that I would sort of call the worthiness bias, and that what we confront on a regular basis is that either as founders of color or those are unworthy of the kinds of investments that others get, or women are unworthy of the kinds of investments. And so this is sort of an underlying piece, and the question is, how do we begin to sort of address that, because it affects everything we do?
Yeah, absolutely. So who wants to take that one on? Mina, did you hear the question?
Yeah, let Mina take it.
Mina, the question was related to worthiness bias for giving similar amounts of money to women and diverse founders as you would for other kinds of founders, and I know that you've kind of encountered this particularly in your work. So do you want to address that briefly, this worthiness bias question?
Yeah, no, it's funny because, so if I understood the question, it reminds me, I'm in Los Angeles, and one of our trustees always talks about having a different ruler to measure different managers of different colors, right? Mm-hmm. And so there's always this, investors can be hypercritical of managers who are women or diverse, but can be a little more forgiving for some of the larger established managers who may not even have that type of diversity. And frankly, we've seen a lot of that across the asset class. And what ends up happening is, you just, like managers like myself, you got to prove yourself way earlier on and make sure you have a fantastic fund one or fund two, because there's no way you're going to make it for as a fund three. And frankly, that's part of the reason, I always say you're not doing your fiduciary duty if you're not looking at these types of managers, because we have a lot down the line. So what can you do about that problem? There's no better solution, but really having more people like us who have that understanding top level, sitting at boards, being able to ask those questions, so that when, consultants come up or their staff comes up with, your plans or your foundations, you can ask those type of questions, and just making sure that you kind of, have a fair and equitable approach in how you're evaluating all the different types of managers. But I typically find that these smaller managers, diverse managers, end up getting on the watch lists faster than other, non-diverse managers as well. And there's no way to control for that unless you have the right the mindset, overseeing those types of programs.
Yeah,
Well, thank you
I
for
have
that.
a few thoughts on that as well.
And actually combine your answer to the question with some final thoughts, and I think we're getting close to time.
Absolutely. So thank you for that beautiful question, first of all, Ed. And that was, I think it's about mindset shift on both sides, on the side of the person who's asking for funding as well as the person who's giving out funding. So on the side of when you're asking for funding, it's, whether you're a venture capitalist raising or an entrepreneur raising, it's about realizing that it's not just that they're doing you a favor by giving you money. You're actually giving them an incredible opportunity. So they are going to benefit from all of your hard work.
Right.
So that's tremendous, number one. Just that mindset shift is helpful to me in thinking that way. Second, on the side when you're giving out the funding, it's important to realize that, I hear over and over, to have women of color or, to hire these women or fund them, we're going to have to lower the bar, right? And I hate when I hear that because in truth, if you are looking at, let's say, a woman of color against a white male, and you are comparing their resumes and their resumes are similar, that woman had to go through so much more to achieve that same resume. She overcame so many more obstacles. She worked 10 times harder to get there. I guarantee it. So in fact, you are raising the bar when you invest in that candidate or when you hire that candidate. So in my mind, that's key. So it's a key mindset shift on both sides. In terms of quick final thoughts, something I think beautiful that came up in our early discussions when we were planning for this conference was, and planning for this event, was around, there are so many problems to solve out there, whether it's climate change, disease, war, huge global issues that we all face as humans. The question comes up, which do we solve first? Where do we address first? And I think the reason I've devoted myself to this field is that I believe that if we solve for equity first, we will be able to have the right voices at the table solving all the other problems and creating the innovations. I'm an optimist. I think that we can create, innovative solutions to some of these global problems, but to do that, we first need to have diverse voices at the table solving these problems together, or we will not solve them as effectively.
Well said, Elisa. Thank you. John?
Wow, it's hard to follow that.
It's always hard to follow a woman.
Yeah, it is. I agree.
I just raised the bar for you.
All right. Go a lot further, too. I think my final thought is really simple. I think diversity and inclusion in this room, it's a safe space for us to talk about it and really try to figure out ways to resolve it. But in the real world, it's not that easy. For this to be successful, it's going to take a long-term strategy. It's not just a quick fix, and we have to understand that. We have to play the system as it currently exists and take our little steps towards fixing it. That's the only way it's going to work. If you're looking for a quick solution, it won't work. And the quick solutions for most people is check the box.
Yeah.
That's not a real solution. That's a Band-Aid.
Absolutely. Yeah. Hunter, we'll let you speak. You measured up, John. Thank you. And Hunter, if you want to speak, and then Mina, we'll have you get the last word.
Our movements have always been buckets of crabs. As soon as any of us starts to get elevation, the rest claw them down. We got to stop that. We've got to realize that all of these issues blend together, that we have a very limited time to fix the very serious crises facing us. And we have all the technologies we need. What it's going to take is inclusiveness, is equity, is justice. The statistics on women controlling finance are clear. By 2020, 67% of financial assets are going to be in the hands of women. So we need to be putting out better product for them. Our product after the gender diversity product will be probably Black Lives Matter or bonds around sanctuary cities. We need to start putting out financial products that address the political failings we're now seeing.
Yep.
And then as an investment community, we need to begin fundamentally rethinking what kind of an economy are we leaving. I just flew in from South Africa, literally got off the plane at 6 a.m. at JFK this morning. Tomorrow night I fly to London. I was in South Africa meeting with a group called We Africa, well-being economy Africa, and we built there a group called the Wellbeing Economy Alliance. This pulls together so far about 15 networks from around the world of people looking to create an economy in service to life. And that's the tagline of Change Finance, investing in service to life. So watch this space, watch for We All, and when I go to London, it is to mentor for the Unreasonable Institute, which brings young entrepreneurs from around the world, puts them together with mentors to enable them to then be investable by folk like you.
Well, that's very powerful work, and we look forward to seeing those products launch. Mina, do you want to take the last word, and then I'll thank my panelists, and I'll release you all for coffee.
Yeah, no, I mean, I would just say, I think, we have to find people who are going to be supportive, and obviously people who look like us are going to be the ones that are supportive, but don't forget about a lot of white males have been the ones that supported, our careers, and trying to get them to be understanding of our cause, our issues is really important for this mission, because if we don't get them on board, maybe we're trying to tackle the majority. So I think we have to spend our time trying to, as I described, evangelize them. Most white males either have a daughter or a sister. And so when you bring that up to them, it becomes more personal when they say,
all
look,
have a mother.
I want my daughters to grow up to have an equal opportunity. So I feel like that's something important. I think we all can do our part, individually, but if we can get more people, like traditionally the white males, in the room, or I think that will help, further our agenda.
Well, thank you for that. I want to thank all the panelists. I think ultimately true inclusion includes everybody, and ultimately we all need to be activated and do our parts in whatever asset class we represent in our workplaces and in our personal lives to educate and interrogate what are our biases and how do they actually affect the rest of our work that we do. I just want to leave you with a couple of resources here. I think I'm getting email, sorry about that. A couple of resources here, people who want to dig in a little bit further onto the concept of unconscious bias or implicit bias, and The Color of Law is a recent book talking about some of the systemic issues that were created in the housing industry in particular, but it's a cross-cutting issue to the idea that equity kind of is the central point around which many other things flow. And so I just wanted to leave that with you. I want to thank you all for being amazing panelists here, and amazing audience members with your questions. And with that, go get some coffee.